Hey everyone, this is Casey here, and today I'm going to show you how to trade gold right now. I'm also going to show you Tesla. But before I get into that, today's video is really important because I'm going to do a $50 giveaway. And this isn't just a normal giveaway. I'm going to do $50 in Bitcoin. And if you just notice, Bitcoin crossed over the $60,000 mark. It's insane. So what we're going to do is, if I get 15 likes and 15 comments on this very video, next week I'm going to come back and give one of those people that have commented a $50 Bitcoin. And we have to get to the level of likes and comments, which it's not a lot. It's only 15. So right now, before you do that, just watch this video, and then at the very end, hit that like button and leave your comment. Okay, so let's go ahead and get started. So the first thing I want everyone to notice is that we are looking at a weekly chart. And I like to start with weekly charts because it gives a long-term view of the thing that we're going to be trading, and you can see that gold has a very good long-term trend, right? If you look from the left up to the right, it's moving up. So that's the kind of thing that we want to look for. And what I like to do is I like to catch uptrends, and I like to catch them on their way on a pullback. And right now you can see gold has moved up, and now it's pulling back. And one of the favorite things that I do is I then will draw a trend line like so, and you'll see that this trend line, when it breaks, when the price moves up, we have a very nice trade. And this is actually GLD. This isn't the gold, because gold is trading about 1,700 and some right now. So this is not gold. This is the ETF. So what that means is you can trade actual gold, but you can also trade an ETF, which moves the same way, and it's basically using a stock to trade gold. So you can either trade the ETF, you can trade the future gold, or you can also trade an option, which is what I'm going to do in this situation. I'm going to show you guys how to do the option as well. So right now, we're still moving down, right? We're in a downward channel, even though it's a very large uptrend. So I'm going to draw another trend line, and you're going to see it. See this channel, and this is called a channel, but it's also like a bull flag as well, because it's moving up and it's a bull flag. So as soon as this breaks, if it breaks around 169, I think that we could get easily up to 194 and probably beyond. And so some other things that are really exciting about this right now, which I really like, is number one is, look at this. You see this strong consolidation channel? Whenever you're trading something, you always want to look for consolidation, because consolidation will happen and then it makes its move. So you can see consolidation and then a big move up. Okay, here's consolidation and a big move down. Not a huge move, but consolidation and a move. Consolidation, a fake, and then a move right back. Consolidation, and then a move. And now we're consolidating, and it's really interesting because this is a weekly chart. So we have 4 weeks in a row inside of this range, and this is a support level. All right, so this is an indication. This is a really exciting candle. Do you see this pin bar? It's a pin bar on a double bottom. You see that? That's a double bottom. So that's pretty cool. We have 1, 2, a double bottom. So we have an even tinier little trend line now that we could look at right here. Okay, this is a tinier trend line, right? So if we break up here at 162, I think we're going to get up to 1,700 or a 170. Okay, so even that is an $8 move. And how long is that going to take? It could take 1, 2, 3, 4, 5 weeks. And it could also consolidate in here a little bit more too. But I'm looking for this to break, and it could pop down another time. And of course, obviously, I don't know what's going to happen. Anything can happen. But this is just my analysis here. So what I'm going to be doing to maximize my profit on this is I'm going to be trading options. So I'm going to pull up the options, and you can see them right here, the options down below. And the options, I want to look at a specific time on these. And the way that we do that is, let's see here. We click this button here, and Oh, never mind. I was looking at the wrong thing. So I like to go out a little bit, right? So let's go out 6 months. That gives me some time. So we're in April. Let's go out to November. Let's go out to November. And so we'll do that, and now we have the prices. So the current strike price, which is the price of the current option, is 161. So we go down, we look at the current strike. It's 161. The price of that option in November is $8.90. But I think that by that time it's going to be trading at 200. So I'm going to go out of the money. And the reason I do that is it gets it a little bit cheaper. So I'm going to go down here, and the lower you go, the cheaper it is. So if you buy one for 680 or for 166, you're going to get the price at 680. So you go ahead and click the order. And that's a sell. I want to do a buy. You click the buy order. I want to buy an option at $6.95 right here. Now, I might wait for a little more confirmation, wait for this to break, but right now, anything inside, any daily candles, let's go back to a daily now. Any daily candles, anything that forms inside of this particular range, if we pop up here and then pop down and we get any bullish, really strong bullish signals, I'm going to be looking at buying this option. So inside of this range, I'm very, very bullish, looking for a bounce. If it breaks lower and outside of this channel, that's a bearish move, and I'll be waiting for more downside continuation. But for right now, I'm very bullish on this. And so this could be an opportunity to really get a solid performing trade. So again, trading is risky. This is for educational purposes only. You actually only have to trade with money that you can afford to lose. Don't do anything crazy. Now, the next one I wanted to look at, let's go back to a weekly time frame here. And I want to look at Tesla. TSLA. Tesla's another one that's pretty fun to watch just because of the big up move. This is a lot stronger pattern than what we saw in gold. This move was straight up. So we're going to draw another trend line. You can see we have a really straight up trend. It's actually so steep that it's hard to draw. And so it is currently testing this trend line, okay? But we also have support right here and support here, and it's held this level. And now what are we getting? We're getting consolidation. So if I draw this in place, you can do that right there. And if it breaks this little area, well, I think we could get back up to 900. And so there's a lot of short interest in Tesla right now, but the shorts have consistently, time and time and time again, have been destroyed. So if you don't really want to trade it short, you might want to buy some puts. So let me pull up the options again. If you buy puts, that means that you're expecting it to go down. So if it breaks this level right here, I think it'll go lower to 377. And so I wouldn't do that, though, unless we get a strong bearish signal breaking the 600 barrier and staying below there, right? I just wouldn't do it because the shorts have been crushed. So, and the reason you don't want to trade short is because there's unlimited risk. So if you short something and it goes up to 5,000, you short one share, it goes up to 5,000, well, you have to cover that at $5,000. That's a lot of risk. So if you do trade short, you got to have a very strong stop loss, okay? But the other way to do it is to put your put on, is to buy a put. If the price goes down, you buy it $3.99 if that's what you're expecting, and it goes to $3.99, the increase of the value of the put goes up and you make money. And so the same type of thing. I do it long term. We want to go out a little bit here. So let's go to January. That's way out there. And you can see, you look at the prices, it's 660 right now. And so if we're going to buy puts and we think it's going to go to 330, you go up and 137. You see that? That's the price of the put. So these are very expensive as well. So that's why you go way out of the money. Let me expand the strikes here and show all of them, right? So now I can go even higher. So I can go way, 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 way. Let's keep scrolling here. And for some reason, okay, there we go. 570 is all that's showing here. Oh, here we go. 520. Oh, it's just taking a while for them to populate. Okay, but you notice the price gets cheaper. So if we think it's going to go to $3.99, if we think that's where it's going to go, well, we could buy an option at $3.99, right? Which is about right here. To buy it is $335. So the price gets a lot better. right? And if we want to buy, if we think it's going to go up, if we get a breakout and we think that it's going to go up, well, we can get in at where 900, and you can see they're still pretty pricey, $80 for a put. So it costs a lot of money for options on Tesla. So that it might be better to trade something like gold, which is more affordable. So hopefully that analysis helps you. But remember, I need you to hit that like button and also leave a comment. What do you think is going to happen with gold? What do you think is going to happen with Tesla? What type of content do you want to see in the future? What do you need help with? Whatever the comment is, I will come back next week and I will answer your question. I'll help you out. And if we get a total of 15 comments and 15 likes, I'm going to do a $50 giveaway to someone that leaves a comment. So again, thank you so much, and we'll see you next week.